Hi, this is Chris Buss with Traders Profit Compass with your weekend profit navigator for September 20th. Okay, we had a big week this week, another week of selling for the most part, and this is setting up to be an important week ahead from a technical perspective. But before we get into the charts, I want to go over a little bit of some trading psychology stuff that I hope will be helpful to aspiring traders. Our culture has become, I'll say, infected, because it's not always a good thing, of short-termism. Everybody looking for that instant gratification, instant response, feedback that we want. And it's also infected trader psychology. In the mentorship groups that I host and in my observations in the trading room and popping around on the internet and Twitter and StockTwits and stuff like that, I see traders constantly considering and even adopting different strategies in the hopes of striking it rich, I would assume, or making it big or making an improvement in whatever they're doing. So let's just take a given scenario. Somebody has this strategy that looks promising, so you adopt it and you let it, you run it for a couple of months, 3 months, and you get some kind of result that ends up being somewhat disappointing, and then you're off to the next shiny object, looking for the next strategy. And what I'm here to tell you is that it is very unlikely that you'll randomly land upon a strategy that's going to work for you long term, because you never give it long enough chance to work. There are, and I'm sure you've heard this before, there's 1,000 ways to make money in the market. And that spectrum spans from trading a 3-minute chart intraday and making 100 trades in a single session, versus the other end of the spectrum with a Warren Buffett type who looks for great companies that are undervalued that he can buy and hold for 50 years. And everything in between. The key to this game is finding a strategy that meshes well with your personality and your capabilities, and then working that strategy over a long period of time. It doesn't matter if it's a moving crossover system, a technical trading system that incorporates a couple of indicators, something simple that's repeatable, that you can hone over time. That's the key. Any of these strategies will work. It's a matter of getting good at your execution. And I think that's the whole key. If you are always jumping around, you're always a rookie. You're always just learning the strategy. And there are a lot of nuances to these strategies, and it takes time to learn those. So my recommendation to any trader is get really good at something. You only need one strategy. And the more strategies you introduce, the more possibilities exist that you do all of them mediocre, that you don't get great at one thing. So expand your time horizon, find a strategy that makes sense to you, that you understand, and hone your craft around it. If you execute one strategy really well, you will have no problems. You may have disappointments, you may have losing streaks, but in the long run, you'll be able to win. And the degree to which you win will revolve around your skill set, your willingness to learn and grow and hone that strategy to make it work for you. So think longer term, think strategy that meshes with your personality and skill set, and work that strategy over time, and resist that temptation to chase a new strategy, because you'll never become great if you do that. Okay, so we've got a light week of earnings, but we do have Costco on Thursday. I'm going to be watching that pretty close. It's an important stock for retail. Couple other names. We've got some home builders, things like that. We're coming into more of a drier spell in terms of the earnings front, and that'll again ramp up in a few weeks. What to watch for this week? We've got a lot of key technical levels. I don't want to get into that right now. We'll get into that in the charts. But the political backdrop has really changed in the last 24 hours, last 48 hours, with the passing of Justice Ginsburg on the Supreme Court. And aside from all the politics, that throws a monkey wrench in the COVID relief package negotiations. Last week there was, some glimmers of hope and light that this compromise committee were hashing out something, and even the president said he would be willing to go along with a $1.5 trillion package, that he thought that would be good and something that possibly the Republicans and Democrats could get together on for the sake of the country and the people that have been really hurting in the economy on this COVID. With the Supreme Court turmoil now front and center, I think it's hard, or will be hard, for the politicians to separate out COVID compromises on, in one area and all-out war in another area in regards to the Supreme Court. So my thinking has shifted a little bit on this, that now arriving at a COVID relief package, which would be positive for the markets, have dimmed, and that there's more likelihood of a stalemate, heading into the election. A lot of new things will be revealed as Mitch McConnell and the Republicans, do whatever they're going to do in the coming days in regards to whether they're going to try and push for a nomination and a vote either before the election or after the election. But what there's the real possibility of is heading into the lame duck session after the election with only 8 justices in place. All these election lawsuits that have already started even before the election add further turmoil to the system, and without a fully seated Supreme Court, they won't be able to decide, or there's a high likelihood that you would get 4-4 ties on some of these big decisions with the election results and challenges and all that kind of stuff. So that turmoil can't be a great thing for markets, that uncertainty factor of even who is the president. We may not know that until, late November, December, January. Who knows where that might go? So Bottom line is the volatility environment is set to increase. That doesn't necessarily mean some big sell-off, but the whipsaws may become elevated, and we may see the VIX climb in that environment. So be prepared for elevated vol, and we'll just have to see what effect that has on price. As far as my strategy and my thinking right now, I am leaning bearish, but not gonzo bearish, as I like to say. I think it's still early to, pile in max short. I don't want to do that here. We're still at levels where it's savable. And what I mean is we're close enough to the 50 on the indexes, on SPY and QQQ primarily, where a COVID package could get through. I don't find that likely, but it could. That's good for 100 S&P handles right there. I don't want to be, max short if that happens for sure. But we are on sell signals. And, across the board on all the indexes, the FATMAAN names, the FANG names, they look terrible. And those names comprise 44% of the Qs. So unless the bulls step in a big way, when you got, 5 names that are 45% of the index, it's going to be really, really hard for that index to go up. And those names also comprise 20% of SPY. So if money's coming out of mega cap tech, you can buy all the energy and cruise lines and airlines that you want. It's not going to move the needle. It's not going to cause SPY or the Qs to go up. It's just not. It's math. So what I'll be looking for next week, and we'll get into the charts here in a few minutes, is there are some developments on the weekly chart that are a hair away from triggering. And we'll look at the significance of that. But once you have a weekly rollover and it goes beyond a daily pullback, those are much more significant sell signals. The longer the time frame, the more significant the signal is. So if we get weekly sell signals and some of these momentum indicators roll over, those things are really hard to stop on a dime. And I'll show you on some of the charts what has happened in the past. Moving into some of these market factoids that are backdrops, they're not things to trade on, but things to keep in mind. JPM is looking for 200 billion to come out towards the end of the quarter, which is, between now and the next 2 weeks, on end of quarter rebalancing. I have a little thing here on the most shorted stocks that may be of interest to you. Liquidity remains light. And what that means is if the bigger institutions decide to lighten up into a liquidity vacuum, there's a much higher chance of exacerbated moves because there's not the normal amount of buyers to counteract some of that selling. So it tends to hit air pockets and, you can get some dramatic declines. I was also interested to see that the short interest in those market leading tech names remains very low. Now it says in the detail that this is as of 8/20, So that might not capture, the last 2 weeks of selling, but even so, it's not going to jump way up in a week. I was surprised to see that. And if that remains the case, when you don't have much short interest, there aren't the natural buyers in the marketplace that would want to cover on deep sell-offs to take profits. And when you don't have those air brakes in the system that can slow the freight train down, again, it can move into more of a waterfall type of thing when there's no natural buyers in the marketplace. So, that's in the back of my mind. And really, you've heard me say it before. I've been looking at this put to call, I call it the extremometer, where we've had all this excessive call buying, in this run up as retail and institutional traders have been chasing this rally. And, it's been the right call, it's been working. But in this sell off, there hasn't been any fear. There hasn't been any extreme put buying at all. Got a little arrow here. We're right in the middle of the range. Above the red line is extreme call buying. Below the green line is extreme put buying. And this chart, as I've mentioned before, is really good at picking bottoms. When you get that flush move and everybody piles into puts, that's a good time to be covering shorts and looking for it to go the other way. There's a number of occasions where you can see how well it's nailed these bottoms in the past. Nailed the March low, nailed the December 2018 low, and has nailed these intermediate lows as well. So I have a hard time believing that this dip, sell off, however you want to characterize it, ends on call buying. I just don't see that. It could happen, yes. If we see price turn around, we have to respect that. But as a backdrop, as what I would want to see as a confirming factor in piling in long, would be a flush move with a lot of, fear elevated and more put buying. And to date, we just haven't seen that. And, frankly, that's surprising. And we'll just have to see how it plays out over the next few weeks and into the election, if we ever do see any put buying. We do have the Fed there, but they're doing what they're doing. And they've already told us they're going to keep doing whatever they're doing from now until the election. So without a COVID package and without the Fed all of a sudden doing more, where's the catalyst? Where's the catalyst for upside if it's not, some kind of flush move here where everybody gets bearish and then they take it the other way. So I'm looking at that. On the VIX, they've been crushing volatility over the last several weeks. We're currently under 27.5. If you see VIX pop above 27.5 and then creep toward 30 and pop above, really good chance that there's a spike up to 35. And above 35, then you're looking at, mid 40s. And if we're in that regime, something's got to be happening on the equity side, probably experiencing, quite a bit of selling. So Alarm that 27.5, even if you're not trading volatility, as a warning flag that people are starting to look for protection, buying those puts, etc. Okay, let's jump over to the charts and see what we can learn. Here we've got the SPY daily. I'm going to run through this rather quickly. It could get to be a really long video, but I mean, it's what we do for a living, right? So we got to get it right. SPY daily. Let's start with the indicators and work towards price. RSI below 50. That's the bearish regime. PPO still nominally bullish above the zero line, but has already executed a bear cross. This week, if we see PPO flatten and come up, that would be a good sign that the bulls are saving it. We'd probably see that in price. But if PPO goes bearish and moves below the zero line, that would put both RSI and PPO both in their bearish regimes, and of course, that would be bearish. Price was in this rising channel. It has broken. We are on a sell signal. Price has been thrashing around in basically an $11 to $12 range, between $3.30 and $3.42.5. And remember our balance rules, if you will. When price is in a well-defined range, you take the width of that range. In this case, it's $12. A break below 330 would favor a move down towards 320, 318. $12 from 330 is 1218. We do have a layer of support here at 320. So let's call 320 our target, our first target on a downside break. Our second target would be the 200, which is here at 310. Okay? So on a downside break out of this well-defined range, which is currently below the 50, first target 320, second target 310. Now, if bulls step in right here and recapture the 50, they could make a move back up to the top of the box, which in and of itself would be a great trade if you're active and trading on shorter time frames. So if they recapture the 50 and recapture this 334, 335 area, they could run it to 342.50. And if they break above, they would be looking at something, 353, probably just a back test of this trend line up here towards somewhere in the area of 350, 352.50, right in that area. So that would be, a bullish outcome, a save of this range, and we'd back, the momentum would turn up, the RSI would turn up, and, that would qualify as a nice save for the bulls. Now, let's go on to the weekly chart. And I've added a couple things since our last discussion. The RSI trend has broken. That's your first sign of a problem. Whenever an RSI trend line breaks, your antenna needs to go up. You need to sit taller in the chair. It's not a sell signal. It's a yellow flag. So we have a yellow flag there. PPO has curled over and is set up for a high level bearish cross. What do I mean by a high level bearish cross? Where you're high on the scale, as we are here, and there's good separation between the signal line, which is the light gray, and the actual PPO line. You can see that's peaked and is now coming down. Now, the last time we had a high level PPO cross was in March. Good separation, high level, it crossed, and then it fell fast. Does each one of these crosses imply a crash? No, but here it did. It's a confirmation of the RSI break. The PPO usually comes after an RSI break, and it did here as well. It's a real sign to sit up and take notice, especially those of you that are, self-managing longer-term money in your IRAs and your 401ks where, you're not actively trading it, but you want to stay on the right side of trends. Because if that's you, if this is you riding the wave, this wave higher, and you get the RSI break and the PPO break, that's where on your longer term money, on the weekly time frame, you want to step aside. Either go to cash, lighten up positions, go into defense mode and safety assets like bonds or something like that, gold. It's a risk-off moment for your IRA money because you don't want to just sit through this drawdown. You want to step aside, and you don't have to short if you don't have to. That's fine. A lot of IRAs won't let you short. But you want to be in cash so you can buy the dip once the dust settles. And on the upside, when you get the PPO bullish cross, then you can pile in long and ride the next uptrend. But you can see in the past, here was one that was Q4 2018. That was a nasty sell-off. So you would have wanted to pay attention on that, back at that time. Before that, here was a bearish cross at the Volmageddon, January, February 2018, where they pulled the rug. And remember, as we've gone up, these, the scale has been compressed. So at the time, this was a catastrophe. Looking back on it compared to March or Q4 2018, it doesn't look all that bad, but that 10% came in 2 weeks. And that would have been nice to sidestep that in your longer term money. So as far as price goes, we're sitting right here. There's been that battle at 330. And remember what we always say, once you break out, coming back for a back test is fine. And that's where we're at right now. Back test the breakout, head higher. That's what you'd want to see if you're a bull. Now, if we break below, then we're back in the old trading range, and that shouldn't happen, in a bullish market. That would be a real red flag. And then we're looking at, coming down. Here's that 320 level we talked about on the daily chart. And here's the Fibonacci's off of the March low. which says, a garden variety pullback. Nothing special, nothing dramatic, nothing catastrophic, just a garden variety pullback. 38% pullback has us coming back to 300. A halfback, giving back 50% of this move, has us coming back, for all intents and purposes, to 285. Now, I don't know about you, but you don't want to sit through that in your longer term money. So if you see, or we see, this bear cross execute, you gotta get really defensive really fast, and step aside from that. Don't write it down, would be my call on that. Let's look at the cues. Same kind of idea. Bearish regime on RSI. We've already had the bear cross. We have PPO heading towards the zero line. Has not really shown any inkling that it's flattening out. We've got this range here between about 270 and 280, so that's a $10 range. We're below the 50. So if this were to really break early next week, I would target a move down to the low 250s. Here is the 38% fib right near this 255 high volume over price support bar. That would be a place where the selling could be arrested. There could be a bounce there. But if it doesn't, then we're back to the halfback and a 200 EMA touch here at 235. That, if 250, if 255 goes, I would be looking for 235 on the downside, where the 200 and this 50% fib are aligned. I think you would find a ton of dip buyers right there at the 200. Now on the upside, if the bulls can reclaim this 50, which is at 271, they could run it back up to 280, which is a 9-point move. That'd be nice to capture. And if they break it out from 280, then you're looking at a back test of the lower channel line right here at 290. So the critical level for tomorrow is Friday's low. If they lose Friday's close and then break this low, wherever it was, let's see, low 262, then I would be looking for the low 250s. So that's your key tomorrow morning. On the weekly, look at the posture of the PPO on the weekly. It's actually already crossed. You can see right here the histogram has gone red. Not a lot. If they could blow the top off tomorrow and the days ahead, they can save this. But it doesn't look very good, very promising. And you can see the last time, this is the March rug pull. And then this is Q4 of 2018. Bad things happen when you get high-level PPO bear crosses on the weekly. It just doesn't turn around that quickly. Here is that support level at 265. If that were to 255, I'm sorry. If that were to break this week, then you're looking at a likely tag of this 40-week EMA down at 235, and that lines up with the 200 on the daily. Moving on to IWM quickly, we had a long period of time where there was a $5 range. It broke below. We got the measured $5 move lower from 155 down to 150. It has been bouncing around in that $5 range here for several days. It's been outperforming QQQ and SPY as money flows out of tech and into the small cap value cyclical type of names. So this week, if you get a daily close above 155, you can take that long and look for a move towards 160. If we lose the 50 in this 150 level, measured move basis, $5 move, looking for a test of 145 where it's the top of the gap and a 200 EMA test. But we can see here that the PPO has been flattening. Good chance for this to curl up. But that said, if SPY and QQQ are selling off, keep in mind that IWM can outperform simply by not going down as much. So keep that relative performance idea in mind, and don't assume that, relative outperformance means, it's going to rocket higher. If SPY and QQQ are selling off, this will have a hard time making, bold green moves. On the weekly, what we've really got to see is a weekly close above 157.5 to break this downtrend resistance. And then there's some real running room that could take price up to 167.5, $10 higher. So that would be a nice move to capture. So if you're trading on longer time frames, that would be an area to watch for on a breakout. On the downside, we've got the 40-week EMA here at 145, and that's the level that we had shown on the daily chart. Now, I pulled up a few of the sector ETFs, the spider ETFs, that I just want to call attention to. Materials has been on a real nice run, outperformance. Everybody piling into specialty chemicals and miners and commodity chemicals. Those are all doing really well. That said, this doji candle on the weekly is cautionary. If you were to see a red bar follow up this week, I would be cautionary that this wouldn't come back down to this 61 for a back test. That's a worrisome candle. Obviously, I don't know how you're positioned in those names, but keep that on the radar. That's a yellow flag. That's not a red flag. A red flag would come on a big red candle that follows up this doji. So be careful if you've piled in long on the materials type names that have been doing well lately. Communications, basically this is a proxy for Facebook and Google. It has lost the 50 and has lost this 5950 support ledge. The door is open now for a move to 5650, open for a $2 move. If you got a little rally, if you got a rally that pushed price up to this 5950, that would be a great place to try a short. You can even try a short now, just that your stop would need to be that much higher, up towards 60. If you're willing to endure that potential pain, I think the door is open for at least a couple dollars lower. And if things deteriorate down to 54.5, where the 200 resides, you can see the RSI is bearish, and we've got the same looks with PPO already being bearish and heading south. I've been watching XLF closely. Right at this, I have 2450 alarmed. I am ready for a breakdown here for a fast $2 move from 2450 to 2250 if things start falling apart. We see that this is the last level of support. We got the 50, and then we've got this structural support here at 2450. If that fails, then price would be below all the moving averages and below this ledge of support here. We've got a double top look prior here at 2575, and so the double top structure would be executed on a break of the low, which is right here at 2450. And then you've got a measured move that brings it down, towards 2250, and that would be my target if price re-entered this $2 trading range. So I think that's a compelling trade if price triggers it, and I would have a lot of confidence that that trade would work. Now, if you're a bull, you can be long against 2450. Technically, that is the call. Support is support until it's broken. I don't really see the big bull case in financials. I know some people do. But if you're one of them, take that shot long. Just keep your stop really tight. And if the bulls step in here, they could run it back up $1.50 or so. But that's not what I'm looking for. I'm looking for a breakdown. Industrials have participated nicely in this renaissance to value. We were at the low of this trading range between 76 and 80, $4 trading range. Here it's clear. If you want to be short, you can be short against 80 and look for a move to 76. And if 76 breaks, you're looking for 72. $4 move from 76 brings you down for a 200 test. Here's your 50. I would think that would act as a support level. So expect a little hesitation there. And if the bulls get it in gear and you get a break above 80, you can get long that and look for a move up to 84 on this $4 range break higher. Healthcare, 104 is your line. You can be long against it or short on a breakdown and be looking for a move down towards the 200, $4 lower. So healthcare tends to be, somewhat defensive. We may see money flow into there. We can see that, it's still on a daily sell signal, breaking below this wedge, and has bounced off of 104 at least a couple times. So 104 is your line. As long as it holds above, the bulls can say they saved it, but on any break of 104 is a good place to be short. Utilities. Right here at the bottom of this box, $2.50 box, which is in itself within a $7 trading range. So if they're selling, you may see a flood into safe havens, which I would think utilities would be one. If you see that, you can be long against 58.5. Look for a move up towards 61 with a potential breakout, which would send it, 63 or higher. But if this 58.5 level breaks, then you've got a really nice short down here to 54.5. Getting a $4 move on utilities is a great trade. I don't have strong feelings, higher or lower from here, but I do know that this 58.5 is really important. You can see how important it's been, all these touches. And if that were to break, you can see price below, all these moving averages are squeezed together. If you get a break here, that could really accelerate quickly. So I would put an alarm there. Okay, let's run through the FANG names and then we'll wrap it up. Facebook, daily chart, wedge break, lost 265 last week, lost the 50, is well below. We had a couple tests of this big gap starting at 249. That's a level to really watch. You would expect if there's going to be bulls, they would be stepping in right here. If they do and manage a rally back up to the 50, right around this, 262, 260 area, the 50s at 261, if they were to kick that back up, great place to anchor a short. If it breaks above your stop, you've got a paper cut. If that was just a reflex bounce and it rolls over, you've got a great trade location for a short. If that doesn't happen, I think you got to get short on a break of 249 regardless and look for this gap fill down to 235. And if that were to fail, then you got your 200 touch where the original breakout happened down towards 220. You would have a lot of dipsters right there at 220 on this back test of the original breakout. Notice up here on RSI, we're not anywhere close to oversold on the daily, and PPO hasn't given any sign that it wants to flatten out and turn up. So the bears are in control. It's just a matter of when the bulls may step in or get a little bit of a bounce going. But I wouldn't let that scare me out. I would be looking to, anchor something on any kind of a bounce if you're not in, or get short on a break of 249. Apple. I think Apple's in real trouble just from a technical standpoint. You guys know that we're short. We're in the October 2nd 105s, 105 puts, 2 weeks out. We had the blow off top with the split. We lost the uptrend line on the daily, giving a sell signal. We came down quickly to the 50. They came back and back tested the trend line, which is a common technical move. Came back to the 50, up to the moving averages, and then rolled over hard in the last last half of last week. And so now it's right here at this monster void that is, except for this one candle, you can't even hardly see it here, got one candle standing in the way of a move to 96. Not saying it's going to happen. You never know what's going to happen. But odds certainly favor that. And I would be leaning short on anything below the 50 EMA, which is at 110. If they recapture 110, take it off. Take any short that you have off and let them see how high they can get. But as it stands now, anything below 110 and the 50 is bearish. Not anywhere close to being oversold. Not anywhere close to bending the PPO to flatten out. And this thing, at least at this juncture, looks like it wants to go lower. Amazon, maybe even weaker than Apple. You can see here there was a gap down on Thursday after it had already lost the 50. Came down to test this 2950 area where this massive void opens up. If there was ever a place to save it, it's right here. If there are dipsters, if there are bulls, waiting in the wings for a Monday morning run, they got to do it now. Once it moves into this void, high likelihood that it comes down and makes a tag of the 200 down here towards 2600, which is $350 lower than it is here. I know it's a scary one to trade for a lot of people, just because of the expensive options and how volatile they can be. But if you have the resources, if you're comfortable with that kind of a trade, here's your line. 2950, anything that takes out that Friday close, Friday low, you might have a freight train on your hands. And then you just set your stop, just above. I think you'll know Monday what the deal is, because this is a logical place for bulls to step in, at support. And that's what you're supposed to do if you're bullish, is buy at support. But given how far it has dropped with all the moving averages above and heading down, those are now going to act as resistance on the way down, on the way back up. And I think the floodgates may open on a break of this 2950. Microsoft, pretty weak. Notice the PPO has already gone into bearish territory with no real signs of flattening. Nowhere close to being oversold. Made a touch down here at 196.50, which is a level that we've been targeting on shorter time frames. If they can break above 202.50, that would be ultra short-term bullish. But with all these moving averages heading down, I think it would really need to clear 210, get above the 8 and the 50 and the 20, and then you'd be in rally mode if price could clear all these moving averages. But I don't think it can. I think if it does pop 202.50 tomorrow, it's going to run into trouble. It's going to run into a wall right here at 207.50 with the 50, and then come back down, eventually break through 196.50, and come in for a back test of this 190 original breakout level. And depending on what else is going on, there's going to be dipsters there. They're going to want to buy that back test, and then we'll see what kind of a bounce they could put in. Google, haven't been following it ultra closely, but it looks like all the other ones. Money coming out, break of the rising daily uptrend line, putting it on a sell signal, put in a flat flag, and now has broken below, right into this support area at 1425 with the 200 nearby. That's a hard trade for me now because of the proximity to the 200. I would simply use this. I would use Google as a litmus test. And what I mean by that is if Google loses the 200 and they don't put in any kind of a reflex rally, that would be a bad warning for the rest of the FATMAAN names where the 200 didn't put any kind of floor in the selling. So watch this one. I would steer clear of this as far as shorting it. Just watch the 200 and see how price behaves. Netflix lost this 480 area, below all the moving averages, not oversold, not flattening on PPO, in fact going bearish. The door's open for a move to the 200 to 430 with technical support at 420. That's where I think it's going. Any kickback to 480 is a gift if you're not in, to get, that $10. Anchor your short against 480 with a stop just above and see if it doesn't roll back over and head to the 200-day. Here would be a level of support at a little under 460. You can see where it tagged that Friday. Your 38% fib pullback level, and then your halfback is down here in that range of 420 to 430. That's where I think it's going. Tesla, remarkable. They've got that battery day coming up. I don't know exactly what that day is, but still well within the daily uptrend line. RSI is still bullish. PPO well above the zero line and flattening out, possibly curling higher. This one's still bullish, very resilient. I don't see any near-term problem. Price above all the moving averages. The warning flag would be on a break of this uptrend line below 400. That's where you've got to sit up if you're a bull and take notice of, a potential shift in the trend on a break of this trend line. So, but all things considered, quite remarkable resilience for Tesla. Right here, honestly speaking, I thought it was done, but it found support here at the 50 and, hasn't really looked back. So that was a great place to step in if you were a bull and you trusted it and it responded. So that was great. Okay, long video, but a lot to cover, and I think this is going to be a really important week, not only from a macro standpoint with the Supreme Court turmoil roiling Washington. See how that plays into sentiment. If it's brushed aside as not being, overly important, then it is what it is. If tonight it causes, futures to sell off and into tomorrow, then it's a totally different thing. But I hope I've impressed upon you the importance of this coming week with those weekly PPO sell signals. Those don't come along, every day. You get one of those, maybe two of those a year, and we're right there right now. So that's where my eyes are going to be focused, on those longer term charts, and also obviously on the daily charts that have already broken down and given us sell signals across the board. So leaning bearish, open to bullish moves, got to respect price. If it comes back, we've got to take note of that. We can't be stubborn. We can't let our ego get in the way of, being bearish and sticking bearish, even though price is heading higher. If that occurs, we'll cover our shorts and then pick up the ball when we have another objective trade location. But if things accelerate to the downside, have your alarms in place and be ready to participate tomorrow or in the next week, whenever it may happen. Have all your ducks in a row. Take a look at your long-term positioning in your IRA. Take precautions to sidestep whatever downdraft may be coming if we see those PPOs roll over. And if it was all a head fake, you can get back long again. No problem. But if there's a massive rug pull, you want to do your best to sidestep that and be in a position to buy all your favorite names back at 10, 15, 20% lower, and be ready to recycle higher when the sell-off concludes. Okay, I hope you found the info helpful. Please hit the like button and subscribe if you're new to the channel. Over in the show notes are links to the blog site where you'll find a lot of interesting and helpful information to aspiring traders at all levels, and a place to register for my content where you'll get it each and every day at the top of the morning and during the day. When I see things happening in the markets, I'll keep you posted on that, and we'll tackle this together. It'd be great to have you aboard. So for Traders Profit Compass, this has been Chris Buss. Talk to you next time.